Last week, the market continued to pull back, and it was the 3 consecutive down week for the S&P 500. And we got talking head talking about market crash and a new bear market and such and such. So in this video, we're going to see what the market is telling us instead of listening to what the talking head is telling us. Let's take a look at the overall performance from the indexes for the week that just passed. As you can see, the S&P 500 was the best performer in a relative sense because all the indexes were down for the week, and they were down at least 2%, if not more. So you can see the S&P 500 was down a little bit over 2%, 2.11%, and even the NASDAQ 100 is down 2.22%, and the worst performer is the Russell 2000, down over 3% and down 3.41%. And here, looking at this weekly chart of the S&P 500, we notice that the range have expanded this week compared to last week. Last week it was only somewhere around the 80. This week we actually have 155 points and was down 94 points, or 2.11%. Now it closed below this 10-week moving average. Still above this 40-week moving average. But one thing to note is that it is continued doing this one-time framing down. In other words, it's making a lower low on a weekly basis, and also we're seeing 3 consecutive down weeks on the S&P 500. And looking at the sentiment, we notice that the market participants are still in the complacent area, although the level of fear has come up a little bit. It is sitting at 17.3%, but it's still below this 20 and 30 zone here. So right now, the market participants are not, getting too fearful, but they are getting a little bit more cautious. And you could tell by the put-call ratio is sitting at 0.97, so it's inside of this 0.7 and 1 zone. This is what we call the hedge zone. So the market participants are buying a little bit more puts now than call. And looking at the up-down volume ratio of the New York Stock Exchange, we noticed throughout the week it was negative. In other words, there were more down volume than up volume, except on Friday. The S&P 500 closed down modestly. It's only closed down 0.01% or 0.65 points. So it's almost like an unchanged, right? So we did see a little bit of a more upside volume on Friday with 1.45 up-down volume ratio, and also a little bit more of advancing issue than declining issue by a touch of a margin of 297 more advancing issue than declining issue. But notice throughout the week it was all negative, and it's below 1,000 to 3 days. From Tuesday, Wednesday, and Thursday, it was more than 1,000 more declining stock than advancing stock. And on Tuesday, we actually see greater than 2,000. And looking at the new high versus new low, we're seeing that the number of stock making new 52-week low is coming up now, as we got 93 on Friday versus the number of stock of making new 52-week high is coming down. You can see from this chart here, been coming down. On Friday, there were only 17 stock make new 52-week high. So we see that the new low is outnumbered the new high now. The cumulative AD line, we also noticed the cumulative AD line is coming down along with the S&P 500. We are not seeing any negative or positive divergence, so they basically just trading or moving hand in hand. And for the NASDAQ, looking at the NASDAQ 100 on Friday, it was down 0.14% or 20 points. And also we did notice a slight positive up-down volume ratio, but throughout the week, most of the day, it was negative. So there were a lot of selling in the NASDAQ market, and also notice the advanced decline is quite negative as well throughout the week, except on Friday, got a little bit of 348 more stock advancing than declining. So that's just a reflection of maybe in a little bit of indecision on Friday because of the OPEX. So, but overall, the NASDAQ market looked pretty weak. And here on the 52-week high versus 52-week low, we can see the weakness coming in the NASDAQ market. Notice that the number of stock making new 52-week low is coming up. We have 262 stock make new 52-week low on Friday in the NASDAQ market versus only 32 stock make new 52-week high. And again, notice that it has been declining the number of stock that is making new 52-week high. And also notice that the number of new 52-week low outnumber the 52-week high is also expanding. So you can see that the weakness is starting to come in the NASDAQ market. And the biggest tell of the weakness in the NASDAQ market is the cumulative AD line. Notice how it come down and put in a new low now, a lower low. And right now, the NASDAQ 100 index is still sitting up here above this 14,690. So we are seeing this tremendous selling down here, the weakness in terms of number of stock making, declining on a daily basis. So we have a lot of work to do here in the NASDAQ market here, especially the NASDAQ 100. So in the last week video, I was saying that we are looking to at least to see the NASDAQ 100 to come down to this 13,500, but we are more likely to look at this level down here below this 12,000 and even possibly come down and test the October or the November low back in 2022. Looking at this yield curve, the 10 versus 2, we are still looking at an inversion on this yield curve. So this chart here clearly indicating that we are still looking for a recession in the U.S. economy, although it has come up from this -1 level to -0.69, but definitely we are still in the recession territory. And as you can see from the 10-year yield, it came up and moved above the 4.25 last week, and it came up to this 4.3% level. Remember, we were talking about the possibility of looking for it to come up, take out this 4.25 and come out and test this high. Now we are looking at for it to come up to 4.5 to 5% in the near term right now, as it's already come up and tested this 4.3. Now we could see a little bit pullback, but not much. Maybe we'll come down and test this 4% level, but I'm still looking for this thing to come up and take out 4.5 to 5% level. And here on the US dollar, we're talking about breaking this trend line, come up to this 103.80. And you see that last week it came up pretty close to that. It is sitting at 103.43. And on this future chart for the US dollar, we're talking about breaking above this level, essentially come up above this balance area and get into this balance area. Then we'd be looking for a move to come up to possibly to this composite point of control at 103.88. Last week, it came up to 103.27. So it's getting close. It did move above this 102.42 level. So now we are into this balance area. So wouldn't be surprised to see it maybe come back down and back test this 102.42 area, then get a push back up to this composite point of control at 103.88. And here for the crude oil, remember last week we were talking about the possibility of looking for crude oil to continue to push up to this 90 level, but we also would not be surprised to see it come back and maybe back test this composite point of control before it make a push. Now it did pull back a little bit more than we anticipated, but right now it's sitting right at this composite point of control at 80.66. So we're going to look for a continued push up to this 83.39. And when it get above this level, then we're basically entering this balance area, and that's what prompts us to look for the price to auction up to this 90.47 level. And for silver, we thought it was going to hold this support, but if it didn't, then we are basically looking for support on this trend line here. And as you can see, last week it came down and found support of this trend line and come back up to this 22.73 area. So we're going to see will it continue to rebound from this support area and pushes back up to this composite point of control near 24.50, or would it come down and test this 21.55, and that's basically come down to this high volume node here, and there are a lot of support and resistance area. So we're going to see will it continue to push back up, hold this support here on this trend line and move back to the composite point of control at 24.50, or come down and test 21.50. And for gold, US dollar was quite strong last week, so we saw gold pull back, and we're looking at this gap fill. So on the pullback, it came down to this gap fill right now, sitting somewhere around this 1918. So basically, we're looking at that 1920 area. So now we're going to see would it be able to get a bounce back up to this 1944 or will it continue to come down? Because basically you have entered this balance area. And if gold continue to move down based on a strong dollar, we could see the possibility of gold coming down to check this 1870 area, or at least this level here near the 1900 area. Let's take a look at the S&P 500 11 sectors. Last week, all of them are negative, and the XLK is the best performer. It only lost 1.16%. The consumer discretionary was the worst performer. It lost over 4% at 4.16%. So we look at this relative strength chart here. This is basically the sector relative to the S&P 500. We see that the XLK is coming down, and it's kind of sitting flat right now. So it's basically performing according with the S&P 500 relative to the S&P 500. So in other words, if the S&P 500 goes down X many percent, the XLK probably will follow suit. So that's why we see a little bit of a flat curve over here on the XLK versus S&P 500 relative strength chart. And here the energy, we see the energy is coming up. So we've seen the oil been quite strong, and that's why we see the relative strength of the XLE is coming up relative to the S&P 500. So it is outperforming the S&P 500. And the healthcare is also been coming up a bit. So we're seeing a little strength coming into the healthcare sector. The utility a little bit flat, so it's putting down, it's kind of staying pretty stationary down here. And so is the material. The material also been flat in the recent week. Likewise, for the consumer staple, it didn't do too much. It's pretty much flat, so it's performing relative to the S&P 500. And the industrial is also been flat as well. The financial is also kind of flat. It didn't go up or come down much at all. So it's been performing relative to the S&P 500. So you can see that in the past week, the S&P 500 come down. So most of the sectors just follow suit with the S&P 500 coming down. And here the communication is coming down a little bit more, and that's probably due to Meta. And we can see that it is coming down a little bit more quicker than the S&P 500. So we see a little bit underperformance from the communication sector. And here in the real estate sector is pretty much flat. Now for the consumer discretionary, we see this is coming down quite steeply. And so we can see there are a lot of underperformance relative to the S&P 500 between the consumer discretionary and the S&P 500. And that kind of makes sense, right? We heard that the credit card debt is over $1 trillion now. And the thing is, consumers basically, maxing out, and they're saving whatever they have is all gone. Definitely no more free government money. So you can see that the discretionary spending could be drying up pretty soon. Looking at this daily chart of the S&P 500 here, as you can see last week, it came down and closed below the lower range of the expected move. And it's getting close to this 43.25 area. So for the coming week, I wouldn't be surprised to see it come down to this level. Now, before we take a look at the possible scenario, let me put up the expected move for the coming week. So you can see the expected move for the coming week on the upper range is between 44.55 and 44.44.30, and the lower range is between 42.95.10 and 42.70. So what we're going to see, or what we will be watching for in the coming week, is to see would it be able to hold this 43.25, this pivot high here, to see would it be able to get support and then bounce back up. If it does, then we're basically looking for the possible target of this upper range. And that would be somewhere between this area here, where we encounter resistance, book 2, came down here, found a little support, kind of back tested a little bit before it broke down. So we probably will come back and back test this breakdown level. Now, if it unable to hold this 42.25, then I'm looking for this thing to come down and take out this lower range of the expected move, and possibly even come down to this 41.95 or near the 4200 level, and see would it be able to find support off of this level here, this pivot high, and also this particular trend line. And for the NASDAQ 100, we also saw the NASDAQ 100 close inside of this lower range of the weekly expected move last week. So right now, we're looking for the NASDAQ 100 to continue to move downward. And here are the ranges for the coming week. The upper range for the coming week is 15,110 and 15,037. And the lower range is between 14,352.70 and 14,275. So what we're going to be watching for the NASDAQ 100 is for it to come down to this low range and see would it be able to find support off of this trend line here and possibly get a bounce back up. Now, if it is unable to hold this trend line for support, then I'm looking for the NASDAQ 100 to come down to this 13,880 level. And that's basically as these support area here, this resistance turn support level here. So we're going to see would it be able to find support at the trend line here and the lower range, and that will be somewhere around this 14,400 area. Now, if it is able to come back up to this 14,800 area, then look for this upper range for potential resistance here, somewhere around this 15,000 level, and that would be coincide to this area here, this balance area where it came down, got a little bounce and broke down from here. So look for this region to provide some sort of resistance if we do see a bounce on the NASDAQ 100 for the coming week. And here looking at the Russell 2000, the Russell 2000 put in a strong day on Friday, but I think this is basically going to be a short-lived type of a dead cat bounce because I do anticipate to see the Russell 2000 come down to this gap level here near 1782 and possibly fill this gap here. Now, of course, it could continue to move up and then it would probably likely to encounter resistance here at 1906 area, then get a little bit of a pushback down to this gap level. So we'll see how the price action will pan out for the Russell 2000 in the coming week. And for the Dow Jones Transportation, it pulled back from this pivot high here, and it was unable to find support near this 15,888 level, and now it's coming down to this area here. So remember we were talking about this inverted head and shoulder pattern here, and this is the potential neckline that it broke through from. Not this right shoulder here, got to draw that a little bit more where it's supposed to be. This is the neckline that it broke through, and we're talking about the possible measure move. Now it is pulling back, so the critical thing to keep an eye on is this level here or near this neckline to see what it be able to hold this and get a push back up at 15,321. And if it doesn't, then basically this pattern is void and no longer in effect. Then we could be looking for this thing to come down to this 14,637 area. Now, if it does get a bounce and come back up, then look for this 15,888, 15,900 area to see what it be going to get back above it. Then we'll be watching for a push back up to this 16,730 area. And for the Dow Jones Industrial, we see the Dow Jones Industrial came down to this 34,277. Basically this, support area here, resistance turn support. And right now we got a little bounce here. So we'll see would it be able to continue to bounce and possibly get back up above this 35,000 area here and then come back down, because I do anticipate the Dow Jones Industrial to come down and possibly fill this gap in the near term, come down to this 33,000. But of course, anything is, possible. I mean, it could come up and, take out this high and maybe go up and make a all-time high. It's possible. Is it likely? Well, in my mind, I don't think so. But hey, there's always that possibility, right? And here in the New York Stock Exchange Composite Index, we also saw it, dip below this 15,700 area and then coming back up. So right now, we'll see would it be able to continue to move back up to this 15,000 or this 16,000 area here, would come back or continue to move down and come down and fill this gap here near the 15,174. Now, before I continue, let me tell you about the Substack page that I published a daily trade plan for the SPY. If you go to my Substack page, I have a section called Trade Plan. If you click on this Trade Plan section, you will see all the daily trade plan that I have published. And within that trade plan, I do a recap of the previous day's activity and how it play out, how those levels that I have identified as potential trade location and also potential trade target plays out. Then followed by that recap, I publish the various level and trade location that I'll be watching for the coming session, the next trading session, and see what those levels are. You could just go and read that section along with the chart, in which I also have identified those level and the scenario and where to watch for the pivot level. So if you're interested in a daily trade plan outlook on the SPY, and sometimes I also post for the ES, the E-mini S&P 500, then go check out my Substack page and in the trade plan section. Let's take a look at the diamond, the ETF for the Dow Jones Industrial. As you can see, last week the price closed below the expected move, the lower range of the expected move, and it came down to this high volume ledger and closed right at it on Friday. So for the coming week, I'll be keeping an eye out for a potential bounce. And here are the expected ranges for the coming week. For the upper range is between 351.30 and 350.10. And for the lower range is somewhere between 340.20 and 338.10. So the bounce that I'd be looking for the coming week is the possibility to come up to this upper edge of this upper range of the expected move. And that is basically this edge here, this high volume edge here. So be looking for a bounce to possibly get up to this area, and then will get rejected and pushed back down to this 345 area. That's this edge here. Then come down and possibly tag the 340 level near this high volume edge at the lower range of the expected move. So in the longer term, what I'm really watching is for a possible, after the bounce, it's possible dip inside of this huge balance area and eventually work itself down to this 323.92 area and possibly even get down to this area here near 320. And here for the SPY, the ETF for the S&P 500, you can also notice that it also closed below the lower range of the expected move from last week. And right now it is sitting right on top of this high volume node here. And here the upper range for the coming week will be between 445 and 443.90. And the lower range is between 429.10 and 427. So for the coming week, I'm looking for a possibility of seeing a bounce off this current level here from this high volume node and come up to possibly to this high volume edge, and that will essentially come up to the upper range of the expected move. Then we'll see a little bit of a pullback and possibly come back down to this lower range, or at least come down to this low volume node here near the 430.90. Now for a longer term, I'm basically looking for a possibility of coming down to this 420 area, this trend line, and then dip into this huge balance area. And the first level to look for is this composite point of control at 410.10, somewhere around there. And that is basically what I'm looking for on a little bit of a longer term type of a picture. Looking at the QQQ, the ETF for the NASDAQ 100, you see that it closed right at the lower range of the expected move last week. And here are the ranges for this coming week. The upper range is between 368.70 and 366.50. And the lower range is between 349.70 and 347.50. So for the coming week, I'm watching for a possible bounce as well for the QQQ and possibly come up to this upper range here, then get a rejection and push back down to this lower range. And that would basically come up here to this high volume area and then get rejected and come back down to this high volume ledge here at the lower edge of this balance area. then be watching for a little bit of a longer term look is to come down and dip into this 338.50 and then move toward this composite point of control at 317.97. So I am looking for a little bit more substantial pullback after maybe a possible bounce in the coming week. And for the IWM, the ETF for the Russell 2000, you see that it came down into this balance area here. And right now it's just sitting right above this edge here, this 183.38. So although it had a strong Friday close and Friday price action, but for the week, the Russell 2000 was quite weak. And here are the ranges for the coming week. The upper range is between 189.70 and 188.80. And the lower range is between 180.50 and 179.50. So for the coming week, I'll be watching for a little bit of a bounce, might not be too much of a bounce, basically looking for it to come up to this high volume area here. So it'd be somewhere around 187.50. That is around here, maybe at the lower edge of the upper range of the expected move. So if we do see a bounce, maybe we get a bounce back up here and then push us back down into this lower range of the expected move down here at the 180 level. Now on the longer term, I do expect it to come down to this 172.50 area, this composite point of control here, and then eventually break this trend line. We see that there's this trend line here because I'm looking at this huge balance area, from these, this price action here. Then eventually I am looking for the Russell 2000 to come all the way down to somewhere around this 165 level. Now let me show you a simple technique for you to identify a potential trend for a stock or for an index. And right here, we're looking at the SP 500, and we're plotting this using what we call the Heikin-Ashi candlestick chart here. It's slightly different than the traditional candlestick, and I will make a separate video to explain that charting method versus the candlestick and the standard candlestick charting method in a separate video. But for now, I'm just going to give you some tidbit on how to use that. When we see a body that is a huge body with very small wick, that tells us that it is a strong trend in that direction. So if we see a red candle, that means it's in the down direction. A green candle, that means on the up direction. And also when we see a body that is small and we also have upper and lower wick, like this particular candle here, then it's kind of tell us that it is in a transition phase. In other words, a little bit of an indecisive phase that could be changing trend or just pausing for a while. So as you can see, the S&P 500, and I'm plotting this on a weekly basis because on a weekly plot, it kind of show you a bigger picture of the trend versus trying to plot that on a daily trend. Also, you could use a daily chart and do the same thing if you want to look at it on a little bit more of an intermediate type of a picture. But here we're basically looking at a little bit of a bigger picture, and that's why I like to use the weekly time frame to do this. So as you can see on the S&P 500, we saw a little bit of a transition here, or a indecision here 3 weeks ago, and that's when this pullback, the recent pullback started. Right, we see this candle here. You see a little bit, it's like a spinning top type of candle. Right, we have the wick on the top and on the bottom. But throughout this period where it was coming up, notice that a lot of these candles, all of these candles hardly have any bottom wick. Right, it's only have top, the topping wick. And here we have a little bit of an indecision here, kind of pausing, consolidation, that sort of thing. But as you can see, the last 3 weeks, we have started pulling back. And the last 2 weeks, we saw these red candle with the bottom, the tail or the bottom wick here. So it kind of gives us an idea that it is pulling back or changing trend. Now, it doesn't mean that it's going to do this here or possibly do this here back in 2020, but that is the possibility. But at least right now, it's telling us that it has changed characteristic, right, from an up to a downtrend. How long is this downtrend going to last and how deep is going to be pulling back? Time will tell. But that is one easy way for you to kind of detect the current trend of the index or of a stock. So let's go and take a look at NVIDIA, because NVIDIA, it is going to report earnings this Tuesday. Now here's the chart, the Hikinashi candlestick chart of NVIDIA. You can see this huge move up. You see all these candles hardly have any wick at the bottom. Even though when it has a wick at the bottom, it's quite small. And here's this consolidation period before the next uptrend or next move up here. So you see this is getting a little bit indecisive here, right? Starting 4 weeks ago. And now you can see the last 2 weeks it really pulled back. And also we did see last week got a little bit of indecision here. So it's probably starting to set up to try to make its mind up, waiting for that earning report to come out on Tuesday. So we'll see how this thing turn out, because we could see something like this from NVIDIA, or we could see something like this on a post-earning move if the market interpreted as a positive, right? We could see a surge up because the NVIDIA, let me see what the market is pricing in. The market is pricing in on the upside for NVIDIA anywhere between $482.30 to $507.50. I mean, that's way up here, right? But on the downside, it is pricing in $382.50 and $383.70. So that is down here. So what we could be expecting for NVIDIA is move down here to somewhere around here on the downside and up here on the upside. Now, I will put out a updated analysis on my Substack page, because I also sometimes post my analysis on the FANG stock. So if you're interested in that, be sure to go and check out my Substack page. So that's one easy way to detect what is the current trend, or what is the trend might look like, what to expect by using the Hikinashi candlestick chart. Let's take a look at the S&P 500 versus gold. Basically, we're looking at the ratio between these two, and to see is the market risk on or a little bit of risk off. So looking here, even though it is over 2 to 1 in terms of the S&P 500 relative to gold, the absolute level is not so important at this point. We're basically looking at the direction, and also more importantly is the divergence. Right? But we see that the S&P 500 has been coming down, but the ratio seems to be holding steady, and that is because gold is also coming down, and due to the strong dollar. So what's important is look at this level here. So if we see this ratio break below this level, break down, then we probably will likely see the S&P 500 go down much more than where it is right now. So that's basically what we are watching in this chart here, on this chart. Because if we look at here, you see this little bit of a breakdown, and we also see the S&P 500 kind of pull back in 2022 as the ratio between S&P 500 and gold comes down. And here we're looking at the NASDAQ 100 to gold, the ratio between those two. And you could see that this ratio is coming down and sitting at 7.66. But again, it's basically we're looking for this breakdown. So if it breaks below, let's say go below the 7.5, we are most likely going to see the NASDAQ 100 to pull back much more than where it is right now. Because if we look at here, also you can see basically looking back at 2022, we see that breakdown of the this ratio. And we see that the NASDAQ 100 pull back substantially and come down here to this October low here in the October to November low in 2022. So is the market in a correction or just in a pullback mode? Based on the information that we are able to gather from this market, the sentiment, the internal, it is showing some weakness, but it is not showing traumatic fear or increase of weakness in which that it is showing us a correction is being taking place. Right now, we're basically seeing a pullback, but that could also transform into a correction later on. But right now, it's too early to tell. And also the internal and the market participant sentiment doesn't tell us that it is at the point of a correction. I think there is still a lot of hedging going on. The market participant is still a bit complacent, but certainly the fear level is starting to increase. So maybe we are approaching the point of seeing a correction. But so far right now, we're still waiting for more sign to tell us that is this just a pullback within an uptrend or it is a correction. So the key thing to look at is for the next pivot high. Are we seeing a higher high or a lower high? So keep that in mind. Just keep watching for the next pivot. So far right now, looking at this S&P 500 chart here, we are not seeing a formation of putting in a pivot high. So we're still waiting for this thing to find the low. So right now, it could come down and take out this low, but that doesn't imply it's a lower low. We need to have a high to come up. So if we see a lower high and then dip down and take out this low, then we're also seeing a lower low. Then that might be the sign to tell us that a correction is taking hold. But if we continue to see this thing just come down and then eventually find a support somewhere around this 4,200 level and we get a bounce back up, then we could basically just looking at a pullback within an uptrend. So if you find this video to be informative, be sure to smash that thumbs up to give it a like and help me promote this video on YouTube. And if you are new to this channel, click the subscribe to this channel. Thank you for watching and stay safe.